Welcome to day 69 of me backtesting my way to success. First trade was a loss, and the reasons why I entered were 4-hour fair value gap right here, equilibrium from the swing low to the swing high, and I entered inside of the golden zone on a breakup structure. So on this candle I entered. Take profit was only the swing high, stop loss below the fair value gap with very little breathing room. And the reason as to why I lost was because my stop loss was too tight. Simply, it's as simple as that. Because the reason also as to why I thought that it was going up was because right above it is like this huge daily order block. And so yeah, I should have just given it a bit more breathing room. Risk reward ratio of 2 is still very good, but I was just, I guess, too greedy for the risk reward ratio of 3. So let's just see how the next trade goes. Next trade was a really stupid loss, and the reasons why I entered were equilibrium from the swing high to the swing low, 2-hour order block and breakup structure. Just 3 confluences. I usually take confluence off of at least 4. I usually take trades off of at least 4 confluences. And also the reason as to why I said this was a stupid trade, because as you can see, impulsive up move, what follows after the impulsive up move? A retracement, correct. I was basically just aiming for the retracement. And I did know that while entering for the trade, and I did see this 4-hour fair value gap and order block to the upside. I just entered for, I don't know, for whatever reason I enter. I know it was a stupid trade. I realized that while entering, I still entered. And also this just looks way better, you know, taking out this area of liquidity, maybe even this one, or possibly even going into this order block and then completely going down into this daily order block. It looks way too good, but I think I entered way too early. And also, as you can see, I know now what this area means, and it actually means that that's the area where price is most likely to reverse to. And based off of this, it looks like, I'm gonna just say based off this, and because, I don't know, because it just feels right for price to go into this 4-hour order block, then go down into this daily order block and then reverse. So let's just see how the next one goes. Next trade was a win, and the reasons why I entered were equilibrium from the swing low to the swing high, just like I said, this 4-hour fair value gap and order block, and a breakup structure in the golden zone in the lower time frames, which was right here on this candle, as you can see, close below, above those 2 candles. Take profits were this area of liquidity and the swing high. Another reason as to why I thought that the price was going to go higher was because it reversed, like right here it reversed just before taking out this area of liquidity, which makes it an even stronger area of liquidity that got taken out now. And so yeah, let's just see how the next one goes. And the last trade was another loss, and the reasons why I entered were for our order block right here, right above it, for our fair value gap, equilibrium from the swing high to the swing low, and once it was inside of the golden zone, breakup structure in the lower time frames I entered. And once it was inside of the golden zone in the lower time frames, I entered on a breakup structure. Stop loss was the top of the 4-hour fair value gap, and take profits were the beginning of this 4-hour fair value gap, this area of liquidity, and those 2 areas of liquidity. First TP was hit, 1-to-1 risk reward ratio, and then my other 2 take profits were not hit. Once price was inside of the 4-hour fair value gap, I was considering about moving my stop loss to the break even, but I was too greedy, and that's why I didn't do it, and I got stopped out in the end. Price just completely shot up. I was actually considering entering only once it took out this area of liquidity, but yeah, that's that. That's already for today's episode. We'll see you in the next one.